So the practical, I suppose the admin side, which is never the fun side, but which is critically important. How many to buy, risk, etc., etc. So what do we have from the charts? The charts have told us what to buy. The charts have told us when to buy. The charts have told us where our stop loss is, but they haven't at any point told us how many to buy or anything like that. So that's where portfolio and position size comes in. I've assumed a portfolio of 50,000. You can probably make it a bit smaller, but you can't push it much smaller. I think if you want to trade equity CFDs, I think 50 is your ideal number. I think you can sneak 30, but you start running into complexities around managing risk properly. First two rules with the risk, 2% at risk in any single trade. I'll explain that in a moment. So your portfolio is 50,000 Rand. You can risk 2% of that in a single trade. 2% of 50,000 is 1,000 Rand. So you get into a trade, you get stopped, you lose the 1,000 Rand. What that means is that you need 50 losing trades in a row to go bust. Not quite, because it's logarithmic, but let's pretend math isn't real and it's actually linear. We can bend math, eh? We're in a trading. So you don't need 50, but you probably need 25 or 30 before you can't do proper risk management. I don't want to say it's impossible. I'm certainly going to say that's going to be one of the harder things to do in life is 25, 30 losing trades in a row with some methodology and discipline to that methodology. So 2% in any one trade, what does that mean? So what have we got? On Aspen, the entry was 333. The stop loss was 295. Now what practically happens when we log in one day to buy the Aspen position? We know that our stop loss is 295. We don't know what price we're going to pay. As soon as we know the price we're going to pay, now we know how much we can actually practically do in terms of position size. Because a 50,000 Rand portfolio, what you've probably done is done it one of two ways. You've either decided Aspen's the best thing in the world and I'm putting half of the portfolio in it, or you've decided you want to do 5 trades at a time, so you're going to put 10,000 in at a time. And neither of those works. So in this case, your entry is 333, your stop is 295, so risk per instrument is 38 Rand. In other words, you buy at 333, you immediately get stopped out, you get stopped at 295, you have lost 38 Rand per share. How many can you buy? You divide 38 into the 1,000, and you get the number of 27. You can buy 27 Aspen shares. In this case, you're buying 27 Aspen CFDs. Value, just over 9,000 Rand. Margin, just over 500. Margin on Aspen is minute. So the trick is, if you went and dropped 10,000 Rand into Aspen as margin, you've got a monster position. A monster position. 180,000 Rand's worth. That's great. If it works. From the chuckles, I know that you understand the point, is that not every trade works. You've got a nice small position here, and Aspen can go to 295. You know what? If you miss your stop and you get 270, your portfolio is going to be quite fine. I've also gone 2%. I haven't included costs in here. The trick is you're actually going to pay 100 brokerage, because brokerage is 0.2. Or 100. You're going to pay $100 brokerage. But you've got a decent position, well risked, well managed. If we take the same portfolio, now we're going Mr. Price, still 50,000, still 1,000 per trade. Mr. Price entry 210, stop 189. Yes, 21 Rand risk per instrument, number to buy 48. Value of trade just over 10,000. So Aspen was just over 9, this just over 10. Margin requirement, $1,000 and change. There's another reason here that's very important. Your margin is only 1,500 Rand in these two trades. It's not, round it off, let's call it 1,500. So nice modest margin out there, which means you've got 48,500 sitting in your account earning you interest. Because remember, you're paying interest on these positions, eh? IG's gone to market and bought those 48 Mr. Prices, and they're charging you interest in that position. So you're paying interest, but you're receiving interest. And that's part of the trick. If you're doing trades that last hours or days or maybe a few weeks, that interest you pay on the position, on the open position, is neither here nor there. But if you've got a trade that runs 6, 9, 12 months, that interest starts to add up, particularly when we hit high interest rate environments. Now, we're not there yet, we are ways away, but at some point in our respective lives, we will get back to high interest rates. What this does is it helps offset that high interest component. At this point, you're positive in interest. You're actually earning more than you're paying. That will swing in time. Next part of the position is 2 times portfolio geared. You've got a 50,000 Rand portfolio. The maximum exposure you want is 100,000. Remember, your exposure is that 10,000 number, not the 1,000 margin. So you've got about, at the moment, 20-odd thousand exposure. So you want maximum exposure 100,000. So that this entire portfolio is geared what we call twice, which is conservative. Most people, almost everyone I know who trades CFDs, gears their portfolio as much as they can. In other words, they take their 50,000 and they turn it into 3, 4, 5, 600,000, 500,000, whatever the CFD provider will allow. And quite simply, that's how you go bust. You overgear the portfolio. Speak to the traders who make money trading. Garth McKenzie, Warren Peacock, Petri Redenhuis, Igor, can't pronounce his surname. He's Serbian. Ask them how much they gear a portfolio. 2, 3 if they're feeling really, really brave. Garth McKenzie will not gear his portfolio more than 3 times. There's no better trader in Johannesburg. Why do we, with respect as novices, go and make our portfolio 2 or 3 times riskier than the best trader who knows what he's doing and expect to survive? We can push that number in time. In 2 or 3 years' time, when you've been doing this and making constant money, you can say, you know what, there's 2% training wheels, I'm going 2.5 times geared. Big time. Garth's been trading 15 years. Petri Redenhuis will push it beyond 3. He will at times push his portfolio to 6 or 7, but that's when he's in winning positions. He's got 5 positions. All of them are highly in profit. All of them have stop losses well above entries. Now he's adding to his positions and he's gearing up the portfolio. So what this is, your Aspen trade is 27 times 380 is 10,000. Your Mr. Price is 48 times 217. These are Friday close values. 10,000. Your portfolio underlying exposure is just over 20,000 Rand, which means your gearing is 0.41. You can push it to 2. So in other words, what this is saying is that this system will give you, at max, probably around 10 trades. So you could have 10 open positions at one time. That's quite challenging to be running 10 trades at any one given time. But as we run different stop losses, we'll get different position sizes. It'll shake out. It'll probably settle somewhere around 6, maybe 7 open positions at a time. And then we've got no more than 1,000 Rand at risk in any trade. We've got an entire portfolio that's only geared twice. I mean, forget firing 3 finance ministers in 4 days or anything like that. Those sort of events, those big sort of left field type events, 9/11 and so on, Brexit, and wait for 9 November when Trump wins and the market gets a spook and crashes. Those type of events are going to happen. And if any one of those events happened to this portfolio while you're fully in, it was nasty, it hurt, and you lived to talk another day. That's the key point. You came back tomorrow, you were still trading. You still had a portfolio to trade. You're geared at 500,000 here, and Brexit happens, or Trump wins, or whatever the case, we get downgraded by Standard & Poor's. I mean, wait for the surprise on 8 December. We got downgraded? I mean, if you're geared 10 times in a portfolio and that happens, you don't survive. You're lucky if you come out with 0. The point around this, the reason why we're not trying to get rich in a hurry is because if we try and get rich in a hurry, what tends to happen is we get broke double quick. If we try and get rich slowly, we can do it. We can live through our own, no disrespect, because I'm talking about myself, incompetence. as a newbie, we're going to make newbie mistakes. I know, did it, got the t-shirt, lost the t-shirt. I was really good at making mistakes. This system is forgiving. Not just of you, but of markets. And that's what. So, process. So that's all great. We got the charts. We know where to find the top 40. We know where to find the charts. Everything else is lovely. We know how many to buy or not to buy. What's the process we need to run with? So process is quite simple. On the weekend, as I said, for me, Sunday mornings is I do fin weeks and stuff like that. So for me, check all your top 40 charts. There are 40 of them. It's going to take, in time, you'll get quite good. Yeah. So when you do it the first time, it's going to be a process. But when you come back a week later, probably not much to do. And in truth, you can set alerts. I'll show you that in a second. I don't know. When I was a kid, I used to use a pencil and a piece of graph paper and stuff like this. Now you just go and you set an alert, and when the triggers, you'll get the alert. It'll happen email, it'll happen SMS if it's got your details, it'll happen in-app alert if you've got the app running on your phone. I'll show you the screen in a moment. I'm also old school. Not sure I trust computers. I also want to be in touch with the market. So I'm going to do that process on a Sunday. The point is, as I said, the first time you do it, it's going to be a whole bunch of PT. Second, third, by the 5th or the 6th or the 7th Sunday in a row, you're running through this in half an hour. You know what to expect. You know that I don't know, Anglo Gold Ashanti is like no way near a bottom turn because, man, it's sitting right up at the top. You've put your lines in places and stuff like that. So the process will be laborious and slow initially. And what I'm going to do in the webcast in 2 weeks' time, which is the webcast is on the Tuesday, day before we vote. On that weekend, I'm going to go through all 40 charts. I'm going to set it all up. So if you've done it as well, we can compare notes. We can draw lines. Say, I drew my line here, you drew it there. Not that anyone's right. What are the pros and cons of the various different places? So Sunday, or weekend as the case may be, check all your top 40 charts for any new weekly triggers. That's your MACD trigger on the weekly chart. At the same time, put your lines in just so that you're learning around stop losses and entry levels. What you're doing is you're getting into tune with the market. What you'll find in a year's time, and I'll be able to name a stock and you'll be able to tell me its current trading range. You just start to know these shares. If any trigger, you flag it, you set your levels. So how do you flag it? You literally have a trader's journal, you make a note there. You can again set alerts on the price alerts. You say my trigger's at 330. If Aspen goes through 330, send me alert, I need to know. Daily processes, monitor any existing trades. And again, set any alerts. For stop loss moving it higher, being gentle. Do you need to monitor this intraday? No. Not at all. I'll delve into it in a moment. My thinking here is that you need 10, maybe 15 minutes in the evening. Because all you're doing during the week is on new and existing trades. Which is maybe in time will be a half a dozen, 6, 7, maybe 8 at max. You can do that whole process in 15 minutes. If you're full in the market. Tomorrow you have nothing because we don't have the triggers yet. And that's what I mean about lazy. The point of this is it gives you time to have a life. You don't want to be a day trader. A day trader is just another job. It pays well, it's got no bosses, but it's just another job. You want to be surfers or dog walkers or wine drinkers or, important things. So weekends is check the charts. Daily you monitor the existing trades, set alerts for entries, monitor your stop losses, adjust them if you think you need to. Be careful with the adjusting. And after a trade is closed, you close the journal. Every trade's got full journal. So on the IG, click a button that creates an image of the chart. Drop it into an Excel spreadsheet or a Word document or something with, the what, the whys, the hows, the monitoring of it. So that you've got all of these records there as well. And of course, perfect trade. I'll come to that in more detail in a moment. So here's how you do alerts. If you're in the chart, you click on alerts. It was really that easy. And it asks you a couple of questions. Firstly, I want weekly. So the question is last trade, bid, offer. I want trade. I'm not interested in bids and offers. Give me trade. Top 40 stocks, nice and liquid. I'm alerting on the MACD. And then it gets complicated. So what do you want? So signal line crosses MACD line. So that will alert me on my weekly chart. So I can go and set that up for all of my top 40 shares. And suddenly I don't have to do my Sunday work anymore. I think we do need to do the Sunday work because we need to have some contact with the market. And then price alert. Click. Next, that's the chart button. Click, set price alert. Tell it what a price alert you want. It'll email you. If you've got the app on your phone, it'll give you a push notification, SMS if your number is loaded onto the system. If it isn't, contact the call center, make sure it's there. And what I'm doing with my price alert is for my entries and stops. So my entry in Aspen is 330. Set a price alert for 330. When I get the ping, 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 ping telling me I'm at 330, I don't drop everything and rush off and do. I'm like, okay, I've got to get into Aspen. Ideally today, but if it's at 4:30 and I'm, about to board an airplane, tomorrow it can probably wait. Although, I think so these days, you haul out your phone, click, 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 click. But don't be slave to the market. The market's here to pay us money. And again, with stop loss. Stop loss triggers, yep. We need to get out of it. So, perfect trade. At the end of every trade, you need to mark yourself.